Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about whether you should have a daily target when you're trading. And by daily target, I mean, like whether you should have a daily target in terms of the number of pips that you're intending to make or the amount you intend to make in terms of percentage, 1 to 3% a day, or maybe even in terms of dollar value, are you looking to make $100 a day or $1,000 a day, right? A lot of people tend to set these kind of targets for themselves when they're trading because, they take trading as a sort of business, right? So in business, you tend to have targets, you must have KPIs, you must have goals, right? And so it seems very natural to them, that when we're transitioning over to to trading, and they are taking trading as a sort of they're treating it as a business, right? A lot of people say that you should treat trading as seriously as a business, right? And they bring over those practices, to trading, and you see a lot of them, they have this little they have those posters, that motivational posters hanging around their bedroom or their office, right? And they have this maybe a whiteboard that says, or maybe an Excel sheet that says, all right, I'm looking to make 10 pips a day, 100 pips a day, 1% every day, $100 every day, right? And they have these goals that they put over there, and while it is actually something which is recommended by many trading guides out there, to have a plan, trade the plan, have a goal, work towards your goal, right? There's something I want to share with you from an institutional trader's perspective, and that is the absolute worst thing to do. All right. Now, before you guys come at me with pitchforks and stuff, right? Just give me a chance to explain. All right, because when it comes to trading, right? When it comes to trading, having a daily target, whether it's 1%, $100 a day, or 10 pips, that is the worst thing that you want to do. That's the worst thing that you can do to your trading, right? And the reason for that is because you can only trade what the market gives you. Okay, you can only trade what the market gives you. For example, the forex market is closed on the weekend, right? Let's put an extreme example here. The forex market is closed on the weekend. How many pips, how much money would you want to make on a weekend, right? Like, would you take your same daily target of $100 every day? Let's just say you have $100 target every day. Will you take that target to trade over the weekend, right? You'd be saying, Desmond, you're crazy, right? You're crazy. Why would I do that, right? And of course I can do that because the market is not moving, right? And you think about it, right? It becomes very clear when you're using an extreme example here where the market is not moving. Okay, market is not moving. There's no trading opportunities. You clearly cannot trade. Now, what I give you another scenario, right? I give you another scenario where maybe this is also slightly extreme, but in December, right, towards the Christmas period, maybe the markets are very, very slow. People, there are a lot of holidays. People have stopped trading. Liquidity is very little. The markets are barely moving. It's very flat. The market is just barely getting by. Would you then try to squeeze out $100 of profit in that day? Well, it's unlikely that you would, because you're just gonna look at the chart and like, the markets aren't really moving, it's barely moving that much. It's kind of similar to almost as if the markets are closed for the weekend because there's not much liquidity. And the same way you won't try to squeeze out $100 when over the weekend, you should not try to squeeze out $100 when the markets are basically not moving. Right? Let's put that into perspective, right? It is the same thing. It is the same thing. The markets are not moving. It's no trading opportunities. You don't squeeze $100 from it. You only trade what the market gives you, right? You trade what the market gives you. If the market gives you a lot of trading opportunity, there's a lot of volatility, a lot of movement, yes, take the trades, make the money, right? But if the markets are not moving, it hasn't moved, right? There's just a period of a lot of indecision, markets are just very illiquid, not volatile, right? Then don't trade. All right, because the danger of setting a daily target is that you then force yourself to squeeze out trades where they don't exist. All right, let me repeat myself again. The danger of having a daily target is that you now try to squeeze out trades where they don't exist. Right, you look at the 1 hour. Let's just say your usual trading strategy is looking at the 4 hour time frame, right? And then you look at the 4 hour time frame. It's like, man, this market is not moving. All right, this market is not moving. What am I going to do next? Right? I'm at $80 of profit. I need to squeeze out. I need to squeeze out that remaining $20 of profit. If not, I can't tell myself that I've made it for a day. I can't give myself that that nice golden star. I can give myself that pat on the back. I'm still missing that $20. It's 11 p.m. The trading day is almost over. I need to squeeze that out. I'm going to go to the 1 hour chart. Right, 1 hour chart, you're like, okay, I see something here. Maybe I need to zoom in a little bit more on the 15-minute charts to look for some, to look for better setups. You go into the 15-minute chart and okay, you find a few setups there. You normally wouldn't consider them in your normal trading strategy, but because you need the 100 pips, you need the remaining 20 pips of profit to call yourself, to hit the target for the day. You go in and try to squeeze it out. Right, what happens is that you compromise on your trading strategy. You deviate from your original trading strategy, the gold standard of your original trading strategy, and instead of 80 pips of profit, you go to 70 pips, then go 60, then go 50, and you go like, oh man, I was at 80. I'm just gonna, I'm gonna make a push and at least get back to 80, right? Then you go to 40, then go to 20, then maybe go to negative 20, and you're like, darn it, I was in profit for the day, and start chasing, and that is where you go down this vicious spiral of revenge trading, right? You're basically taking hits on the market, and the market origin, imagine market is there, it's like, yo man, I already told you that there's nothing in trade today. Why are you trying to squeeze something out of me, right? And that's the problem of having a daily target, is that not only are you compromising on your trading strategy, but it can lead you down a very vicious path, right, of revenge trading, trying to not congratulating yourself enough for a day well done. 50 pips, 80 pips, if that's what the market is giving you, that is what you should take. Right? Don't try to squeeze something out, just for the sake of hitting this arbitrary number that you set for yourself. Okay, guys, so I hope you found this topic useful, this podcast useful today. Right, if you ever have that daily target, you set it on the Excel sheet, you have this massive Excel sheet, right, planning, how much profit I'm going to make a day, going to have a compounded return, and how I'm going to be a millionaire by, how in 1 year, 2 years, or 3 years, right? Throw that out of the window, right? It's good to keep track of your progress, right? It's good to keep track of how much profits you make across each different currency pair, because that's a good way to further optimize, intra asset, by realizing that, hey, when I'm trading Forex, I tend to make a lot of money when I'm trading the majors, but when I trade the crosses and the minors, I don't seem to make that much money. That is what tracking will be good for, right? Not so much. Right, not so much when you're trying to, when you're trying to squeeze up profits from the markets where it doesn't exist. All right. Anyway, guys, that's it from me for today's podcast on whether you should have a fixed target, a daily target when you're trading. Right. Do remember to subscribe to our podcast here at IronFX. As here at IronFX, we're dedicated to bring you the very best trading education to take your trading to the next level. Until I catch you guys again, stay safe, trade safe, and peace out, guys.